What is LIBOR?
I heard about it on the news or something.
What is what?
I have no idea.
I think it has something to do with like European banking.
LIBOR? Wow, I don't know.
I'm Willa.
And I'm Tony.
And we're here for another edition of Back to Basics to talk about LIBOR. Wait, what? What's LIBOR?
Well, voila, LIBOR is the London Interbank offered rate, and it's hands down one of the most important interest rates in the world.
Tony, it doesn't sound basic to me, but you know, come to think of it, I heard about it on the news a while back, and then a friend of mine asked me about it.
Voila, it's an interest rate set in London, England, by a group of banks, and it's just really important.
More important than my school loan rate?
Oh yeah.
My mortgage rate?
Absolutely.
How about my credit card rate?
Definitely yes, because all these rates you just mentioned are all themselves affected by LIBOR.
Explain.
LIBOR is an interest rate that gets used kind of like a benchmark for setting a lot of other interest rates used in all kinds of financial transactions, even some consumer lending, like your credit card interest rate, for example, is tied to LIBOR.
So even my student loan rate could be based on LIBOR.
Absolutely. But you know, lately there's been a lot of controversy surrounding LIBOR.
Yeah, I heard one of the big banks had to pay millions of dollars in fines because it fudged some of its submissions used to set the LIBOR rate. And some other banks are still being investigated for trying to do the same thing.
Well, you actually do know quite a lot about LIBOR.
Tony, I also know a bit about how LIBOR got started. It was way back in the 1980s.
Whoa! The 1980s weren't that far back. Come on.
Well, from what I've read, back in the 80s, banks needed a good benchmark rate they could use in setting prices for their financial contracts. LIBOR was created to help with this. Back then,
and up to today,
to determine the LIBOR rate, certain banks reported the rates they would have to pay to borrow in different currencies, such as the US dollar or the British pound sterling.
That's right. The banks report rates they think they can borrow at for different borrowing periods, ranging from overnight to an entire year. And then the average of all these rates for each of the currencies is called the London Interbank offered rate, or LIBOR for short.
Tony, I've heard there are some ideas out there about how to improve LIBOR to make it more accurate.
That's absolutely right, voila. But to learn more about LIBOR, and indeed some of these new ideas, visit imf.org and search Back to Basics.
Okay, I get to pick the topic next time.